Hey everybody, it's Pete Carmesino here at Chaikin Analytics. This is the halftime show here on StockCharts TV. And each and every week, we kind of just do a market overview to kind of see what's happening out there in market land. We got a lot going on as usual. It's never dull. And that's what makes it fun. So hopefully we'll look at some charts that make some sense. We have been talking about TLT. It's been a massive move up in that fixed income security ETF, whatever you want to call it. It's a basket of, a lot of government bonds that are supposed to be no longer than 20 years. The duration is a little less than that, but, nonetheless, it's a really good proxy for bond prices. And so when you see the TLT moving in one direction or the other, where rates are going. So we had an absolute rally in that particular ETF. However, it's down a little bit today. So it might just be a technical rally, and that's kind of what I'm looking at here. A lot of things are oversold, obviously fixed income included, but I'm not alone in this camp. There's a headline out. Goldman Sachs is saying the same thing about interest rates. They think they're going to stay higher for longer. That doesn't mean they're going to go higher from here, but at the same time, look at the trends. The trends are intact still, even though we had this sort of bounce from oversold levels. That's typical, and it's definitely technical. I'm not sure it's very much fundamentally oriented. So speaking about that, we got a few names that had some earnings today. We're going to look at some of those names and some names that have just recently got some market calls or analyst calls on some of them. And I just want to review the charts because sometimes I get a little confused and just not seeing what the fundamental analysts are seeing on our charts because I know they're not looking at charts. I know they're looking at fundamentals, but at the same time, as investors, we've got to look at both sides of the coin. I know something can get so cheap that it looks just too good to be, to pass up. But at the same time, let's not confuse, lower price for value all the time. Okay, so we just don't know what's happening now. In the case, I'll reveal one name I'm going to talk about, which is Disney. In the case of Disney, it was very much oversold, very much in an established downtrend, but excellent earnings and potentially better outlook. So, they're restructuring, they're doing some things, they're trying to, run some cost savings campaigns, and they're doing it. It seems, so anyway, the street thinks they are anyway. So we'll see. So let's just dive in. We're going to look at oil for sure. What an incredible pushback that's had. Well, I should say drawdown from those higher levels. We talked about this. We called out the 75 level. I've had the 75 level on my chart for a long time in increments of 25, 50, 75, 100. But that is sort of that equilibrium place. It's also right around that White House buy zone that we've, I built last year or so. So let's dive in, take a look at some of these charts and see what's going on today. All right, let's just jump right into TLT since I got it up here on the charts already. So, we've talked about this for quite some time. The target was really around this high, and in between this high and this sort of peak here, we kind of rounded it out to, again, $75 to 80. It got really to the high. It got to that high level and turned around. Now it's been bouncing. Look, it's not like it hasn't done this before, right? So this trend is intact. It's down on the downside. Obviously, the trend in rates, this is the 10-year rate here, is still on the upside. And it looks like it might test the 4.3-ish area, right? So just be aware of that. I mean, look, you could see longer term, look back where this was around this 5.25 or so, which is kind of my target. And I'm not sure how much significance that's going to make anyway, how much of a difference it's going to make. But, it just seems like it's just not complete at current levels. But, it could be wrong. But we're watching it, and that's where TLT is today. It's up in the last couple of sessions. Looks like it's up today as well. But we'll look at the Chaikin chart before we leave here today. All right, let's look at the S&P, the Nasdaq, and we'll look at oil as well. All right, looking at the Nasdaq, you've seen this chart now for several weeks. I started really building it around in this zone back in, how about weeks, how about months, several months, right? So maybe I'm going to make a new chart, but this is the markets that we track. So it's back in the channel, right? Maybe that sounds like an album cover, back in the channel again. You've got, this gap that I think needs to be filled. Not sure at this point. It sold off. So what would that give us? An 11% pullback. That's correction area. We were in the seasonal setup for a correction anyway, the weaker seasonality to the markets around that October timeframe. We rolled over and stopped, right? Guess when? Right around when there was a Fed meeting. and the Fed paused again. So look, interest rates drive this market, but let's just look at this a little closer. I'm going to zoom in. You can see what I have here. It's called the near-term target. That was built after this move, or after this first gap was filled. But guess what? Lo and behold, there it is again. It's kind of sitting right in that zone. Hasn't yet got above that. A lot of technicians are looking at this level, calling it resistance even back from July area. And you can see this kind of zone where it was a little bit more support and resistance. So, once it's support and it breaks, it becomes resistance. And that's right where this zone is, happens to be a gap. And it's really doing a job here, backing and filling. So I'm not sure if it's obviously sitting here to roll over. I don't know what the exact catalyst can be. Maybe it's jobs, maybe it's inflation. Let's hope it's not a massive credit event or anything that's more serious. But, not that those other things aren't serious. It's more or less how much of an impact will it have in the immediate trading sessions that follow any kind of event. So this is where we're at. We're at that area. We're in kind of no man's land at this point, but that's what the S&P is doing. Let's look at the Nasdaq. All right, little different story here on the Nasdaq. Certainly was in correction territory, being down around 12% from the July highs. Again, from a Fed meeting area there. This is all kind of in between these last several Fed meetings, right, where we had a rate hike, a pause, and a pause, and now obviously people are kind of extrapolating that, saying, okay, well, if the Fed's done, right? Again, that's a big if. If the Fed's done, tech's going to rally, right? Well, it did, and it's kind of sitting right around here. I would think that it has to break this level, the 15.6 level on the Nasdaq 100. That's the actual index. I would think it'd have to break that level to kind of really get to higher levels. It's out of the range, out of the channel where the S&P is back in its channel. And I still think it has this gap that it wants to fill. Again, looking for a catalyst on the downside. So not exactly sure here. This is kind of in no man's land again, but definitely came from oversold territory. There was some catalyst there from the Fed. And obviously people are kind of reading into that. Could just be short covering, folks. Not exactly sure. The point is there's a lot of gaps here, and this happened very quickly. It's not sure it can sustain itself as a full-fledged rally at this point. All right, jumping over to oil. We talked about this, for a long time now, more than a year. And we talked about the White House buy zone. We talked about when it was announced. The range was 67 to 72. We had 75 as an area of resistance. It became support several times right here. Really kind of meandered around this, right? I mean, this was really a pivot point to me. It's something that's kind of teetering above and below. Once it broke out and you got the trend change here on those crossovers, it obviously got to a level where things started to change, right? Production started to change. Now you're seeing demand slowing in certain areas of the world, like China, which we were not expecting. So when you have this rolling back to these levels, this again looks like a technical trade to me. And it may be predicated on the dollar and rates and all of those things kind of combined, but there's never really one thing that's pushing any kind of commodity in one direction. But we had this number, we had 75 as sort of an area of interest, for lack of a better word. This is pretty violent sell-off, right? So could it get back into the zone? I think it does. So I'm going to actually just update this, try to leave this. What did I have it at 67 or so? I'm going to try to leave it right around 67 and change and just see if this kind of comes into play again. It should be a level of support, right? I mean, that's kind of where things should start to cease the downtrend. So you can see how I'm doing this, saving all my charts here. So we're going to leave it there. That's still going to be in play. And I'm thinking, if anything, it could get into this area and test maybe the high side of this. But so far, 75 looks like a brick wall. All right, I'm going to review a list here that it's kind of a hot list that we have. It's a signal hot list. I'm going to just look at the relative strength sells and buys. But before I do that, I want to go through a couple of names that were just highlighted, as some of the biggest analyst calls here, in today's market. The first one being NVIDIA. I know I have Target up there. I'm going to switch to NVIDIA because it's a popular name. Look, this is a resilient stock, right? I mean, AI poster child, this is it. What confuses me, and still to this day, I can't understand, is down here, no one was upgrading their target to 400, but up here, they're putting their target to 600 and 700 and even higher in some cases. Not exactly sure where all the targets are now. But my point is that, this is an interesting name. The relative strength never broke down. I will have to give credit where credit's due on the stock. it's undeniably strong, right? There's no doubt about that. But there are other names out there that are kind of catching some attention as well. But NVIDIA is kind of like old hat now, right? Obviously, it got reiterated over at Wells Fargo today as an overweight. That's not really that surprising. There is some news. Obviously, they've got new chips that could cater to different types of markets, and there's a lot going on. So look under the hood there. But I just wanted to call that one out. Next one on the docket is not one of my favorite stocks here. It's called Rivian. Not really a believer in electric cars from the investment standpoint. I think they're cool. I think electric cars are great. I'm not sure they're really solving anything to do with the climate issues. If there's even a climate issue, that's another story. My point is that there's a lot of people like loving this stock, and I'm not sure what the catalyst is to get you to buy this and why. Now we're bullish. Now let's look at this really quick. The factors in here are actually interesting. It's been bullish for quite some time, right? But it's not performing. It's sideways to down. If you start to look under the hood, like if I start to look at financials, I see debt to equity okay, and everything else kind of neutral. So financials fundamentally not great. What's better? Earnings is a little bit better, but I mean, folks, they're losing money, right? So sometimes the algorithm here can be tricked to see a beat, but look under the hood, please. Like no pun intended here. You won't find an engine in this. You'll find a battery, but the point is it beat by 22 cents, but on a loss of $1.73. Beat by 34 cents on a loss of $1.25. Beat by 31 cents on a loss of $1.08. Beat by 13 cents on a loss of $1.19. They're losing money. So my point is that you've got revenue of $3 billion, a market cap of 16. You're looking at beta of 2. You've got price to sales. You're 5 times sales. You're still closer to book than I thought. To be honest, at 1.3 times book. But my point is that this is in a downtrend, and you're seeing some of the big names like GM, right, closing down some of their electric facilities, right? Look at GM. That's not doing any better. Ford, same thing. And this car market in general is in, a bit of a downtrend, and it looks like it's going to stagnate here for some time. So I wouldn't be blindly following anybody into these stocks until you take a look at the chart and then obviously dig a little bit deeper. You got Morgan Stanley coming out and reiterating Rivian as an overweight. I can't see it for the life of me. So I want to just call it out because I think it's important. Let's look at Disney real quick. Have good earnings. Now this stock has been in an undeniable downtrend. You cannot deny that, right? Up almost 8% today. Big pop. I mean, that's great. You want to see a name change trend, violently like this. But, obviously bottom fishing is a dangerous sport. You would have had to really done your homework and understood what the company could deliver. A couple of technical things in here. You can see a lower, should I say a higher low here that formed right around the trend line. You got an oversold. So technically there was something set up, but you know me, I like relative strength. It just wasn't there, although it was improving. Again, can't deny it. A long way to go in the name. I just don't think you missed it. If you like the idea, you can maybe wait for a pullback and see if you can get a better entry, on this name. All right, let's look at relative strength sells. And I want to show you something here on the Chaikin system. This is really cool. So you see this up here. I can pull this in. Now, these are all the names that are relative strength sells. Now, there's a lot of names that are up here, right? But my point is when you start to look at the charts, there's plenty that are down as well. When you start to look at the charts, you can understand what's going on. Let's look at a name like TOST, right? This is a name that's supposed to help the restaurant industry, cater to their customers. It's a technology platform specifically to, entice spending and ease of use. In other words, ordering, purchasing, and picking up, right? It's a relative strength sell because it's already in a downtrend, right? Relative strength's already there. It pulled back. When it gets overbought or close to this level, it's just a continuation. If I look at Amdocs, already in a downtrend, even though it's up 2% today, this stock is in a downtrend, right? You're seeing all of these are going to have the same signal. How about CSIQ, Canadian Solar? These solar stocks have been getting brutalized, right? Again, people reiterating buys on First Solar up at these levels and then loving it here and then really liking it here. And then the stock continues to go down. Just be careful. Don't get sucked into analyst calls that you see on these major news outlets. Sometimes they're steering you into a stock. For the life of me, I can't understand why. But you've got to make sure you're doing your own process and you have your own due diligence and look at these charts. Use technicals when you're not understanding the fundamentals, because I'm having a trouble kind of looking and seeing what are they seeing here. Now, fundamentally, it's not bad, right? I've seen better, but technicals are holding this thing back, and that's more important in this type of environment, right? So look at all of these. I've got how many? I mean, over 100 relative strength sells, right, today. A lot of names that are already bearish fundamentally, even that are up. So these things are kind of pushing higher. You've got weak trends. The stock's up 1%. It's basically an ETF, right? So it's still in a downtrend, right? The relative strength hasn't changed. So again, watch that. Now let's flip over to the other side, and I want to show you a stark difference. Relative strength buys, well, not many. Now it says 7 and 5, but I have a filter on. So if I take this filter on, because I'm filtering for volume and other, and market cap. So what do I have? 12? Big deal, right? So I'm seeing 12 buys, over 100 on the sell side. It's telling me that the market is setting up kind of on weak footing here. And not that any of these are major names, but you do have a name like Modine Manufacturing that broke trend, although it's actually hanging in there pretty well. You got a name like Dr. Reddy's that broke trend. You've got a name Marqeta Financial Services kind of meandering there. Nothing big here on the buy side. So these are not prominent giant names. They're kind of, small cap unknowns that are getting some love here, on the system, but not something I'd be running into. So when you see that stark difference, look at the number of relative strength sells to buys. I'm seeing a weak relative strength market. Okay, everybody, that's all we have for today's halftime show. Again, thanks for tuning in. I'm Pete Carmesino here at Chaikin Analytics. We'll see you next week here on the halftime show on StockCharts TV. Talk real soon.